Welcome to Grace Kennedy's Investor Briefing. I am Don Webby, Group Chief Executive Officer. With me is Andrew Masado, Group Financial Officer. Andrew, is this your first time with me in this capacity?
Yes, it is.
Welcome. We welcome all participants who have joined us via the internet for this audio conference. This briefing has been scheduled to run for 40 minutes. We will use 25 to 30 minutes of this time for presentations and the remaining time to accommodate your questions. During the question and answer session, you are welcome to share your questions by emailing us at gkinvestor@gkco.com. Let me repeat that. You can email us at gkinvestor@gkco.com. You may also call or send a text to our communication team at 876-809-1121. That is 876-809-1121 or 876-809-0464. That is 876-809-0464. I will now make a few comments on our performance for the third quarter and for the year-to-date up to September 2030. Then I'll ask Mr. Andrew Masado to share a little more information on our financial performance. Well, this is indeed, colleagues, a very special occasion for us at Grace Kennedy. This is our first investor briefing at our new corporate headquarters in downtown Kingston, Jamaica. We actually moved in on May 3rd, and we had our official opening on May 29th. In terms of our financial results for the third quarter, the performance was good. We reported revenues of $25.54 billion and profits of $1.44 billion. That is an increase of 17%. For the year-to-date, up to September 30th, our revenues were $77.03 billion, which is $3.20 billion above the previous year. Listeners will recall also that we had set ourselves a target to be a $100 billion company by 2020, and based on the current run rate that you're seeing there, we have $22.9 billion to make up for 2019, which means that if we deliver on, let's say, $23 billion, we will in fact be a $100 billion company by 2019, a year ahead of our target. And I believe certainly that is achievable. Our objective, therefore, is to ensure, having generated the revenues of $100 billion, is to ensure that those revenues generated will flow to the bottom line. We basically have three main strategic initiatives ongoing that we are focusing on to ensure that this happens. The first one being expense reduction, second one being better margin management, especially as it relates to our food business, both domestically and internationally. And the third one is that we are looking at all our business processes to improve our efficiency and ensure better customer delivery. On a divisional basis or segment basis, and Andrew, of course, will get into more details, our domestic food business showed really good growth in revenue and profits. I would say certainly the Grace brand in Jamaica is performing exceptionally well, and all our core products for the Grace brand is showing good growth, both in revenue, margins, and profitability. You recall, listeners, that we did two main acquisitions recently, Catherine Speak and Consumer Brands, which, as you know, is an exclusive P&G agent in Jamaica. And both of these acquisitions are going very well. And I'll speak to that a little later in my comments. We are also pleased to say that our Gap, Denby, we actually commenced our exports, and I was happy to visit the plant and see our canned ackee being done up, our Grace Can Callaloo, and our Grace Jerk Seasoning. All of these products for this year has been exported to the USA, UK, and Canada. We expect to, through GraceKennedy's innovation, to add more products to Gap Denby for 2020. Our US company continues to do well and show improved performance. One of the products that we are extremely pleased about is the performance of Grace Patties, which can now be found in Target, Walmart, Publix, and most of the multiples in the USA. In fact, I think if you look at the numbers closely, our Grace Patties, in terms of revenue growth, is just under 100% growth year over year. We also, on October 7th, opened our new facilities in New Jersey, Woodridge, New Jersey. We have invested $5 million US, and what we are pleased about is that this investment is really fitting in right in terms of our strategic initiatives, which I've mentioned before, which is to reduce costs, improve our margin management, and also to improve our customer delivery. I'm also pleased to say that our staff, in terms of their engagement, having been relocated to a really first world location, is extremely motivated. So in terms of our food business, colleagues, listeners, our domestic food business here in Jamaica is doing exceptionally well. We are very happy. Our Gap Denby plant is now producing the canned ackee, the canned callaloo, and the jerk seasoning being exported USA, UK, and Canada. Our USA company is also doing extremely well, showing improved performance with a new facility. Our UK business, while performing reasonably well, we continue to have our challenges with nourishment. However, we believe the necessary strategic plans are in place to ensure that that product turns around in terms of revenue performance. In fact, we are going to be introducing a new packaging. We're going to maintain the can, but we're going to be introducing a new packaging in a PET bottle early 2020. The initial feedback from our customers, the cash and carriers in the UK, is extremely positive. So we expect the nourishment in the PET bottle to do well and ensure that that product continues to grow. GraceKennedy Financial Group, for the 9-month period, also performed well. Revenues up and pre-tax profit up. Our bank, First Global Bank, is having a very good year. Our retail segment of the business is growing extremely well. Our SMEs, which we have been very focused on, is also showing good growth. So we are very happy with the performance of First Global Bank, and we believe that this growth for the bank will continue. Our insurance segment, GKI, is also doing very well, showing increased revenue and pre-tax profits for the 9-month period compared to 2018. Remittance business has been challenging, but revenues a slight decline, pre-tax profits also slight decline. I, however, believe that for the rest of 2019, you're going to be seeing a very strong performance of our remittance business. We have been very innovative in terms of introducing new products, the direct to bank, where customers can receive money through Western Union for deposit straight to their bank accounts. We introduced Woo.com, where you can actually send money to over 200 countries 24/7. And there are a number of other initiatives that we are going to be introducing via a digital platform over the next 6 months or so that will ensure that we continue to grow and compete effectively in the remittance market. A key strategic objective of us for the remittance market, or the money services market, is that we're going to be expanding our network in Jamaica and really rebranding Western Union in Jamaica. So currently we have about 150 locations. By the end of the year, through strategic partnerships with other financial institutions and other partners, we are expecting our network expansion to take us to 200. That's 150 to 200. And by the end of 2020, we're actually looking to have 300 locations throughout Jamaica offering our Western Union services. We continue to focus on compliance, as I said many times before, at the AGM and other places, other forums, that we have a zero tolerance for compliance, and I have seen significant improvement in our compliance. And I want to use this opportunity to really congratulate the focus of our compliance team. We have invested heavily in technology, and that seems to be paying dividends. On a more softer note, our CSR policy, as you know, GraceKennedy Foundation, we awarded scholarships valued at $20 million to 90 university students. I'm extremely pleased about that. Our Grace and Staff Community Development Foundation, we celebrated 40 year of our 40th anniversary. Really underlined we care for Grace Kennedy. And our international coastal cleanup activities in Jamaica on September 21st with a team of over 364 volunteers. The team collected over 7,800 kgs of garbage and plastics from the Gunboat Beach and the Buccaneer Beach. And I want to congratulate all the staff of Grace Kennedy and all of those who is helping us to ensure that we have a better Jamaica in our environment and in our education. I'm going to pause here now, and I'm going to ask Andrew Masada to speak a little bit about the segment report and the financial performance. And then we're going to open up for questions from the audience. Andrew, over to you.
Thank you, Don. As mentioned before, the group has done well for this period. For the 9-month period, we had revenue of $77 billion, an increase of $3.2 billion or 4.3% growth. And then our pre-tax profit showed improved performance. This is showing an acceleration of the performance compared to our second quarter. So this quarter we're up compared to the prior year with profits before tax of $4.8 billion compared to $4.69 last year, or 2.65% increase. And then the profit attributable to the owners of Grace Kennedy increased also compared to last year at $3.27 billion compared to $3.2 in the prior year. What is also very encouraging is our operating performance. So our profit before other income is actually up 30% compared to last year at $2.88 billion versus $2.2 billion last year, an increase of over $660 million. Now, we did have some expenses that would not have had previously. In particular, we implemented a new accounting standard, IFRS 16, which is the standard leases, and this had an impact of $209 million more in expenses compared to the prior year. And so this would have depressed the growth, the otherwise good growth that we have had. And so when you look at the operating performance, that's really a good indicator of how we're doing operationally. In addition to that, the post-employment benefits that we offer under the accounting standard IAS 19 also saw a significant increase for this year. So those items would have increased our expenses compared to the prior year. And so operationally, we're doing quite well. For the quarter, I would also say that the quarter, which is the July to September period, also showed very good growth. Our profit before tax for the 3-month period actually increased by 17%, or $277 million. So also very good growth for the quarter. In terms of our segment results, 3 of our segments showed increases in revenue and profits. The only exception to that was our money services division, which had a flat performance in comparison to the prior year. And as Don mentioned, we are really looking to re-engage with our customers, expanded the branch network, and also continue to reinforce the compliance measures, which we believe is a competitive advantage. In terms of our food businesses, revenue increased by over $2.5 billion for the 9-month period. So very good growth, top-line growth, and also increase in profitability. For banking segment, the profit growth has been over $170 million. So what we've seen is an increase in our bank agents. For First Global Bank, they added 4 new bank agents for the quarter. And this is really reaching a lot of customers who previously would not have banked, been in the formal banking system before. So we're seeing improvements because of that. And then for insurance, we're seeing growth both in revenue and profits as well. And this is a significant improvement over the prior year. I think those are the main highlights for our performance for this period.
Okay, thank you very much, Andrew, for that presentation. Any questions coming through my colleagues? There's one that I have here. It's about high-low. Do you have any plans to expand high-low? And that's a really good question. We have been reinvesting very heavily in our food retail, high-low, for the last 3 or 4 years. Customers, consumers will have seen a new Leganese store, very modern-looking Leganese store, Manor Park being refurbished, Mobay Fairview being refurbished, and Barbican being refurbished. And I can tell you, retail is a business that you have to continually invest in. And we have seen the results with improvement in revenue for all the stores that we have renovated. To answer the question, yes, you would have heard, I'm sure, that we have a high-low express in our new corporate headquarters, and it's serving our downtown customers very well. It's quite busy in the days, and we're happy to be getting the support from our colleagues of the Stock Exchange and the BOJ and Bank of Nova Scotia and the ICD Group. And I expect that growth to continue. We're going to be also opening a new store in the Grill. Hopefully that new store will be, and it's along a 7-mile stretch. Hopefully that new store will be finished by July. At the same time, you always have to revisit your portfolio, so there could be some closing of stores that are underperforming during that year. But I expect that we will continue to grow high-low. In fact, we have set ourselves a target that in 2021, we would like to be expanding at least 3 new stores a year. I think the high-low express model is something that we can really expand on, and it has really taken to the market. One of the stores that I'm really happy about, and we're going to be doing a lot of work on it, and my fellow colleagues at the University of West Indies, we're going to be fixing up that store at UWI to ensure that our students have a more comfortable environment to shopping. The other question is actually to you, Andrew, IFRS 16. I heard your presentation, but can you just expand a little bit in terms of impact on the GraceKennedy Group?
Yes, so this new accounting standard really has changed the way we account for irregular operating leases or the rental arrangements that the group has. And now what you have is a situation where you actually show an asset and a liability on the balance sheet, whereas previously this was not recorded that way. And you've replaced what your regular rental expense in the P&L with a depreciation charge and an interest cost related to that. So for this year, for the 9-month period, we saw a negative impact of approximately $209 million because of this change in standard. By next year, it will normalize in terms of a comparison like for like, but at this point in time, there's no comparable number for 2018.
Thank you very, very much, Andrew. Just waiting on another question here. When is, let's see if I can read this one. When is Canopy Insurance expected to start operations? Will move in the group's insurance. Okay. Canopy, just to recap, colleagues, ladies and gentlemen on the line, Canopy is a health insurance provider. It's a joint venture between the Mossen Group of Companies and GraceKennedy Group. I have the privilege and honor of being the first chairman of that company. The company actually started operations already. It started in October 2019, and GraceKennedy will actually be moving our portfolio to Canopy on December 1st. Maybe that's a bit premature to announce, but we also got another very large Jamaican company who is also expected to start December 1st. So we are really off to a good start with Canopy. I want to congratulate Sean Scott and his team and the Mossen Group and my team here at GraceKennedy for this startup of Canopy. I think it's innovative, it's offering very great services, and I expect big things in the future of Canopy. Another question here about devaluation of the devaluation of the Jamaican dollar. I think we have said it here at GraceKennedy before, and I may just say that I support wholeheartedly the position of my colleagues from the PSOJ, President Keith Duncan, and the GMA, Richard Pandoy. We really need predictability in the market. When you have a volatile market, it causes uncertainty. I hear what some of the financial experts are saying about purchase on the forward market. But when you have volatility, I'm sure we have checked it out and we have costed it in. The banks actually cost in that volatility. And at this time, a forward market is very challenging, I should say, to be attractive. So really, what you want is predictability in the market and some amount of stability so we can plan forward. It is especially hard on our manufacturing companies, where of course they have an input that they purchase from overseas, and then it takes a while for that raw material to go through the process, and when you pay for it, you're talking about maybe 90 days, and then it's become difficult to plan and price your products. I, however, would say that I have a lot of confidence in the central bank governor, Mr. Richard Biles, and I'm sure he's very aware of the sentiments of the private sector, as articulated by Keith and Richard and now myself, that he'll have it under control. So predictability for the foreign exchange market, that's what we're asking for. And we have to be careful how we have these wide swings where the dollar devalues 5% in 1 month and then goes back down. You know, that causes a lot of speculation and uncertainty, which is not good for any economy. Andrew, you have anything else to add on the dollar?
Well, what I'd say is, in terms of the impact on GraceKennedy, the volatility in the currency has had a negative impact on us, and in that respect, we are a net earner of US dollars, and therefore we do have some benefits from that, but at the same time, as Don mentioned, we do have a lot of inputs into our manufacturing processes and our distribution that require currency, and so having this level of volatility has negatively impacted us for 2019, and therefore we have employed some strategies to hedge against this volatility, but we really do need market stability in order to better be able to plan our operations.
Okay, and this is on the GKMS. So you would have read a week or two ago about our partnership with Amazon. And yes, this is another part of our innovation through the Western Union network. We're at GKMS using an Amazon pay code. It really allows Amazon.com customers in Jamaica to pay in local currency for their Amazon.com purchases. That's interesting. The previous question was about foreign exchange. Mm-hmm. But I'm saying no, with Amazon.com, through the Amazon pay code, through the GKMS network, you can actually pay in your local currency, which I know is going to be a big benefit. The feedback that we've been picking up about this product has been amazing, where the demand is very high, And I'd encourage all of the Amazon.com users out there to look at the GKMS network, and you can pay in your local currency. We expect good growth in terms of offering that product. Other questions? Are there any plans to forge a merger with FGB with another similar entity to create critical mass? I mean, at GraceKennedy, we are always looking at the opportunity to unlock, maximize shareholders' value. First Global Bank, you're correct. We're a small bank, but we are performing well, and we're actually seeing significant growth both in revenue and profitability. We are not out there at this time looking for mergers or acquisitions in terms of our bank, but if the opportunity arises that will meet our objective of enhancing shareholders' value, obviously as a publicly listed company, we would have to look at it and see if it makes sense for our customers, our staff, and the GraceKennedy shareholders at large. The other question is, is the company still looking to list on NASDAQ, and has it ever considered Canadian Stock Exchange announcement? The truth is that I have not, and my team, we have not looked at the Canadian Stock Exchange. Andrew, maybe that's a good idea to have a look at the Canadian Stock Exchange. We continue to have meetings with our investment bankers, primarily out of New York, about listing and structure of the GraceKennedy Group. I must say that this is not a priority for us at this time, but this is something that we will continue to have discussions with our investment bankers in New York. And the idea about Canadian Stock Exchange, why not? Andrew, let's have a look on it and see what's happening. I can tell you the feedback that we have been getting from our investment bankers in New York, given the vision of GraceKennedy Group to become a global consumer group. And let me just repeat again for the benefit of everyone what we define as a global consumer group is that 60% of our revenue will be generated from outside Jamaica. We expect that to be met. We're now at 48%, Andrew, 48, just under 50%. Second criteria is that half of our profits will be generated outside of Jamaica, and we're just under 50% again, so we're on the right track. And leveraging our relationships with our international partners. That was primarily generated out of discussions with Western Union. And in fact, I just came from a Western Union GraceKennedy board meeting in Barbados last week, and a big discussion was that how are we going to grow together by expanding into new countries. And we have agreed that we're going to have a joint team looking at opportunities outside of our current 12 territories that we are now in, to look at opportunities. What you'd recognize about the GraceKennedy Group, we are in the English-speaking Caribbean. We're going to expand that now to look and see if there are other opportunities outside of the English-speaking Caribbean to partner with Western Union. Listeners must also remember that GKMS, GraceKennedy Money Services, is a strategic alliance and a partnership with Western Union where they own 25% of the company and we own 75% of the company. So there's an active committee in place that will look at acquisitions in other countries of similar business to GraceKennedy Money Services. How will the movement of Canopy affect revenue from the insurance line? Well, obviously the Canopy is going to be a net addition to revenue, and Andrew, you can maybe answer the technical terms about that. But it is expected that Canopy is going to add to the growth of our revenue line, and may I say, in the medium term, we expect a good return on our investment for Canopy going forward. We believe that we have a really, really great product offering. using first world, first class technology with a great management team in place. And I can assure you that company is going to be performing exceptionally well going forward. And we're off to a good start, and execution is the name of the game. Andrew, the revenue, you want to comment technically how this is going to affect?
Sure. In terms of revenue, on the group's results, this is a joint venture arrangement. So initially we will not see it directly showing on our line, but you'll see a share of our results in the consolidated results. So that's, and then in our notes to the accounts, we'll show the revenue coming from this entity.
Okay. All right. Andrew, can you explain to us the pension movement you just mentioned in your stockholders report and what is influencing that negative impact on the GraceKennedy results?
Yes, in terms of the post-employment benefits, what we did see at the beginning of this year was that the liability had gone up because of a change in actuarial assumptions. And that change now, when you work out what is called an interest cost on the liability, it ended up having a higher cost coming through the income statement. These actuarial assumptions change from time to time, and because these liabilities are so far into the future, then a small adjustment to assumptions can have a significant impact on the results. So at this time, what we're seeing is a reduction in the discount rate, but that is having an impact where it's increasing the liability for future obligations. And that's why we have it.
Okay, maybe you can share with the listeners how does that discount rate, how is it arrived at?
This discount rate is really determined in collaboration with both the Institute of Chartered Accountants and the actuaries get together. There is guidance in the accounting standards on the methodology to use. You kind of look at your long-term bond rates as a primary indicator of the discount rate.
Okay, thanks. I think this is probably going to be the final question in terms of time. Let me see if I can read this one. Okay, it's about financial inclusion. I'm just going to paraphrase the question. Basically, we have been saying as a GraceKennedy group about financial inclusion, and the question is, how are you doing? I think we're doing reasonably well. FGB owned 4 bank agents in the quarter, one in Buff Bay, Portland Junction in St. Elizabeth, Morant Bay in St. Thomas, and New Kingston in St. Andrew. So our agent banking rollout is going well. I think this brings the total MoneyLinks agents across Jamaica to about 8. As you know, we have very aggressive targets in terms of financial inclusion and setting up agents. So we believe certainly by next year these numbers will more than double. You know, we have said it before, financial inclusion in a market like Jamaica is extremely important, where we are capturing the underserved or the underbanked from the financial system. And it has been said by several business leaders that this is critical in terms of the future growth of Jamaica. Are there any more questions, my colleagues? Well, this was good. A lot of questions coming through. Ladies and gentlemen, listeners, I want to thank you very much for listening to our investors briefing for the third quarter results and the year-to-date to September 30th, 2019. Can I remind you that after the session has closed, that you can email us questions, and I'll be happy to answer them at gkinvestor@gkco.com. gkinvestor@gkco.com. We'll be happy to hear from you. Or you can send a text to our communication team, 876-809-1121 or 876-809-0464. Ladies and gentlemen, thank you very much for taking the time to join us. We appreciate it and looking forward to hear from you further questions, and we'll have our next investor briefing after audit results are published in February. We're expecting a good fourth quarter. All indications are that we should have one, and we are very focused as a management team in delivering good results for 2019. Thanks again for joining us.